Hi, and welcome to Trader Talk with Bharath. Bharath is CEO and founder of LEVERJ, which is a decentralized leverage cryptocurrency exchange. Our guest host today is Teddy, a LEVERJ community member. Thanks for hosting today, Teddy. Please tell us a bit about yourself and your trading experience.
Hi, my name is Teddy. I started out in 2013 with mining cryptocurrencies, and from then I just like trading better, so I just got more and more into trading on different exchanges and gradually moved on to using leverage options and other trading methods. But first of all, I want to ask Bharath if you can tell me how you started trading.
My father was a trader, and he was actively involved in the stock market. So I got exposure to it early, but I really started trading when I was a graduate student, and started trading stocks. Initially, tech stocks, because I was from a technology background, and tech stocks were doing much better in the sense they had more volatility. You had a higher chance of getting a positive return. I have tried trading everything else that I could think of, penny stocks, options, and eventually I settled on futures, and I was trading futures for a long time until I discovered crypto. And after that, I mostly have been spending my time building a crypto exchange, because in those days, the options we had were things like Mt. Gox and Bitcoinica, which were not very secure, and I was not comfortable putting large sums of money on them. So I started building my own crypto exchange. But I have more than a decade worth of experience trading all manner of instruments, leveraged and not leveraged, equities, everything else. You there today?
Hello? Yeah. How would you say your trading experience have been?
Well, generally, I think the first few years are very humbling. They teach you a lot of things about yourself, and they teach you a lot of things about the market. And the people who start trading in bull markets, like I did, learn very quickly that although it looks like you're a genius because you made so much, the fact is everybody's making, everybody's profiting because the market is going up. And when the market suddenly stops being bullish and starts crashing, you learn that everything you have built over the past few months or years can disappear overnight. And I was in those days, just like today, there was this philosophy of just hold, just buy and hold, and everything's going to be fine. That turned out to be not very easy, and it is not as simple as you can buy anything you want and hold, and you will profit. That is a strategy that works for certain specific kinds of assets that are fundamentally changing the nature of whatever it is they want to disrupt. And those winners are very few. So you have, for example, Netflix, which disrupted the video industry. You have Apple, which disrupted the whole phone, and they created a convergence device. And you have some obvious things that are disruptive and very successful. Those you can hold for decades. Most assets you cannot really hold because the fundamentals, which look very attractive, can just dissipate overnight, because there is something even more groundbreaking that solves the problem a lot in a lot cheaper way, or a lot more efficient way, or any other revolution you couldn't expect. So I moved from being someone who buys and holds to someone who actively trades. So whenever something goes up, I always sell. and when it goes down, I try to buy after it stops going down. And it took me a while to understand how to trade, and a lot of the struggle was me realizing that trading amplifies your character and it doesn't build character. And the people who come into trading are a specific kind of people whose character is automatically set against them, right? So, for example, many people trade because they think it's you can make a lot of money working from your home, and it's just easy money, and it's a lot of money. Now, so such people, a lot of times they don't have the discipline and patience, and they end up being pushed around by the market, and they learn the hard way that it's not easy money. It's very hard. So it took me a while to be profitable, and even now, there are phases I go through where I'm not profitable, and that is true, I think, for every trader. People, even traders who traded for decades, go through patches, rough patches, and you just have to, during the good times, you just have to make a lot more than what you lose in the bad times. So that's essentially, I think, every trader's journey, and I've pretty much gone through the same.
Yeah, I agree with you. When I first started out, I also was joining when the bull run was. Like everything you bought was just making money, so you didn't actually had to care about
Yeah.
what you bought or when to go out. So, but I think after the first downturn and you see like your portfolio is just losing money all the time,
Yeah.
it's like you start thinking more about what you're doing, and like you said, you need to be careful buying and selling.
Right. So I think that is the first thing you learn, is that in bull market everyone is a genius, in a bear market everyone is an idiot. And the people who can trade bull markets and bear markets with equal comfort, they are successful. They are good traders. And the reason is bear markets can last for years. And if you in the old days there was this when I say old days, I mean, before the 2008 crash, before Bitcoin,
Yeah.
there was people were trading equities, and for them it was very straightforward. Markets go up. If they go down for 2-3 months, you just don't trade, and you just wait it out, and eventually market settles and starts going up, and everything is fine. But what we've been exposed to since the crash of the dot-com and 2008 is that bear markets can last for years. And if you're not able to trade in a bad market, you have to find a different way to make a living. And once you are equally comfortable in both, you to be comfortable in a bear market, you have to learn how to do short selling and margin trading and things of that nature. So you will need to be a more advanced trader to be able
Yeah,
to trade all the time. Yeah.
I agree with you, because when it's bull market, you can just do anything, but when things are going down, you have to be organized and use the
Yeah.
positions you have so you can gain the maximal money from it. But
Right.
like, what in your mind, what is a successful trader? Like, there are so many people out there. Like, I made $1 million and I'm a successful trader. But maybe
Uh,
they were lucky and they started out during a bull run or
well,
something.
they were successful in making a bunch of money, and that you have to give credit to them. Maybe they saw, like all the early people who got into Bitcoin in 2011, 2012, even if they bought 100 coins, which in those days would have cost them less than $1,000, they are doing very well today. But you're not a trader at that point. You're an investor. For you to be a trader, a successful trader, it means that you are very comfortable looking at the market, and you can sense the flow of the market. You can sense when the trend is going to start, when the trend is going to end, and when the trend is continuing. And this is sounds very simple, but for a lot of people are unable to distinguish uh, a pullback, just a deep pullback, from essentially the end of a trend and a reversal. And many other people have the opposite problem. They look at every push as a reversal. So they end up buying every dip, and it just keeps dipping further and further and further. But that it doesn't make sense. They would be trading against the trend, and eventually they'll lose everything. So a successful trader, first and foremost, has a good sense of direction, market direction, and they never trade against trend. And they have a sense of direction, and they have a sense of when the direction is going to change. So this sense is sort of intuitive, but you also can develop it by just watching the market. I don't think there's any other way to do it, but to just keep putting in screen time. You keep watching the market, and you get a sense of it. You communicate with it, and every market is different, and it has its own character, right? So, for example, the fiat markets in the S&P 500 or whatever else, markets move up slowly and steadily, and they one day they just crash. They just drop, 5% or 10%. And then they go back up. In crypto, as in oil and many other volatile products, things go up 10%, things go down 10%. They move up and down a lot. The great thing about this is, for a trader, this is exactly what you want. Volatility is what you want. And volatility exists in markets where uncertainty is high, where the risk is high. When the risk has been eliminated by regulation or by any other, some other constraints, like the equity markets, you don't see a lot of volatility. What happens is the stresses accumulate and they explode all at once. So you have a financial crisis once in 10 years, right? You have the dot-com crisis in 2000. You have the 2008 financial crisis, the credit crisis, and so on. And it is sort of like the release happens, all that energy, all the inefficiencies, they give way because the things that are constraining them fail, finally. In the crypto markets, which are less regulated, you have a crisis every month. You have Quadriga just folding. Every month something or other happens, and the markets are a little more resilient because of that. They price in the volatility because the uncertainty always exists. This gives you a much more richer market to trade. And if you're a good trader, you should enjoy volatility, and you learn very fast in a volatile market. What takes you 10 years to learn in the fiat markets and the equity markets, you're going to learn in a couple of years so we already had how many bear markets in the 10 years. Every couple of years we had a bear market, which in the equity markets, it takes you a while. You would also build up so much wealth and lose all of it over there. Here, at least you learn very quickly and you adapt, and hopefully in the future, you are better at dealing with bad markets and become a more successful trader.
Yeah, that is something I have been witnessing also. Like the Bitcoin market is moving so fast compared to stocks and other markets.
Yeah.
So like in the beginning, it was really hard for me to trade this market because it's moving that fast. And for my first, I started out with doing like trading call groups and like that. But I really found that like more taking the focus away from trading than actually trading myself. So I stopped doing that and just went more into focus, learning myself how to trade and so on. And I was wondering what makes trading so important to you.
So there's a variety of reasons why I think trading is a life skill that everyone needs to understand. Everyone can develop. So most people are they live a very predictable life, very structured life, and that is good. There's nothing wrong with it. But what trading gives you, if you're good at it, one thing it gives you, it gives you financial freedom. In the sense, if you are good at trading, you can always have a level of income regardless of what happens to the economy. So you don't have to be dependent on your boss or the government or anything else to keep everything going smoothly. As long as there's a market to trade, you can provide for yourself and your family. So this is the greatest thing about trading. The second greatest thing about trading is you understand that value is always temporal, right? So the things that people value uh, a lot of times are not obvious, and they're always changing. And if something is valuable today, it's not that valuable tomorrow. And this gives you a sense of reality and shocks you out of any preconceived notions you have about what is valuable and what is not. A good example is, when there was a when I started trading, it was actually pretty early. I was in '96. There was a stock called iOmega, and it went from 50 cents to $55 in like I think in a few months, less than 2 years. It's just rapid rise. And for stocks, this is very rare. In crypto, it happens all the time today. A lot of people just said, no, it's going to keep going up forever. And but what happens is, after that, it just went down to essentially back to $1. But the if you are a believer, if you easily believe and worship the thing you trade, you have to understand this should not be your religion. The product you trade shouldn't be a religion. You have to have that sort of objectivity to know that when there is profits on the table, you have to take the profit. So that kind of being able to live and assess something objectively, I think, is very valuable to people.
Yeah, because when like you see your portfolio growing, it's easy to like just want it to grow more and more and more. But like I think it's hard for people to get out of a trade that they think is winning. But when the price is suddenly going down, people want to stick onto that trade and just want to hold it because they know it has been like a higher price before. So
Right. Yeah. There's few enemies that a trader has to deal with when they're trading, right? The first is, most traders don't have patience. They see something moving, they want to jump on it. And initially they look at something, oh, this is going up, I'll wait for it to come down a little bit and then jump in. So instead of coming down, it just keeps moving up. And the more it moves up, the more you get anxious. You feel FOMO and you want to jump on it. And you will jump on it, and maybe you see some more profits, and then the price moves against you. And then now you feel panic and you want to get out. Sometimes you're shaken out of a trade, and as soon as you're shaken out, it starts going back up again. And when it goes up, if you don't take profits, you have to take a little bit of profits on every push. The more ridiculous the move up, the more profits you have to take. The more modest the move up, the less you can, you can even let it ride a little further. The reason for this is very simple. There is anything parabolic it simply cannot be sustained. It would need so many more people coming in to put money into the same product. That much of people and money doesn't exist in the market at that time. So the more parabolic it goes, the more you have to take profit, and it's very hard psychologically to do that. It is something you learn, and after seeing, your theoretical profits just keep going back to being cut short every time, then you realize that you're going to, every time you see a huge windfall, you are going to take it. And that is discipline. So most people don't have discipline either. So they don't have patience and they don't have discipline. So without these two, you're just going to lose all your money. And I don't mean you lose little money. You're going to lose everything you put into it. So the more you develop these two, so trading is mostly about self-discipline, about growing yourself internally. People talk about indicators and this pattern and that pattern. All of those will work if you have patience and discipline, and none of them will work if you don't have patience and discipline.
that's very true. But what kind of trading mentality have you built up over the years?
So initially, I used to trade 5-minute charts. I tried 1-minute charts, and eventually I realized that the more decisions you have to make, the more you get fatigued after a while. So every bar, when it closes or as it's forming, you have to make a decision, and to make a decision, you have to process a lot of information. That's a lot of cognitive load. It's very taxing to the brain. And once you have a losing trade, your mind is not it's not calm, and it's not working at 100%, in a rational state. So you are tired and you are shocked. You've been slapped around by the market. You will make mistakes and start losing. So the thing that I realized is to have a trading mentality, I need to be relaxed, and I need to be, to me, when I trade, it should be like I'm doing anything I enjoy, watching sports. So it has to be that I have to be that relaxed to be successful. And the way I do that is I slowed myself down. The first thing I did was say, I'm not going to make a decision until a bar is closed. So within the bar, a lot of things can happen. The bar can be bullish, and in 2 seconds it can be bearish, and you can go back to bullish. And then in the end, it could just become a doji. Right? So when the bar is forming, if you make a decision, it's a premature decision, and it happens because you lack patience. So my mentality always has been patience, and to be slow, and to only make decisions at bar closes. So this gives my mind time to rest, and time to absorb any of the craziness that goes in the market, and make a decision rationally.
Yeah, I had the same experience. Like first I started out with lower time frames, like 15 minutes, and I suddenly made a lot of bad trades because I was just too focused on the lower time frames. But when I gradually moved up to hourly and daily, my trading got a lot better because I think there is a lot less mistakes to be happen when you take less trades.
Right.
So
Over trading is the first mistake of a new trader. It comes from the need to learn, and the curiosity, and to say, hey, what happens if I do this? Oh, I think it's going to do this. Let's see. And it's a very expensive, tuition you're paying for this, right? So the second thing about trading slower time frames, doing a 4-hour chart or a daily chart, is that the quality of your signals are also, you get fewer signals, but they are always higher quality. Whereas in a 5-minute chart, most signals are worthless, and you need a lot of experience to be able to winnow out the bad ones and pick on the good ones. And even really good traders, if they make enough decisions, they'll be mentally fatigued, and they'll eventually end up making bad decisions. The other rule that I recommend to all traders is that if you have 2 losing trades a day, stop. Just don't trade anymore. You are not in a mental state to be able to win back that money, or to have profitable trades. I mean, you can make exceptions occasionally, but you really need a lot of experience to be able to get beaten every day, after so many trades, and then retake the winning position. It is better you just wait for one sleep cycle, and the next day you're fresh, everything is new, and you can attack the market again. So have limits on the number of losing trades, and have a limit on the amount of loss you take. So when I say amount of loss, you need a stop loss that's sort of fixed. So what happens when you have money on the line, the anxiety you feel is very similar to anxiety of sensing danger. Like if there's a wild animal threatening you, your mental state is identical, and you will do what is needed to get out of that mental state. So you end up making a lot of mistakes because of this. So the way to deal with this is to ensure that the losses you take are always around the same size. They're almost exactly the same size. So over time, your mind gets used to it. So if you're taking different sized losses with every trade, your mind will never get used to it, and you will always be under that anxiety and pressure. You'll never be relaxed when you're trading. But if you have the same size loss, then your brain expects it. It knows that I'm getting in here, it moves against me. At the most, I'm going to lose this much. That is fine. And if it goes in front of me, in my direction, after a certain point, I will take a profit. So that is discipline. You always programmatically take a profit and you take a loss. And the reason you have a stop loss is because a lot of times trades will move against you before it moves in your direction. So you shouldn't be shaken out. So in many platforms you can do this programmatically, and on our platform we plan to put those as well. But in crypto platforms, most places you don't have the automated trading, which enables discipline and therefore more steady performance.
Yeah, I know that the LEVERJ platform is going to be one of the first decentralized exchanges that will offer leverage trading as an option. And I'm sure a lot of people is wondering like the difference between leverage trading over spot. And
Yeah, it's very different. It's very different. So in spot trading, there are a lot of things in your favor. For example, you can buy and hold. You don't have to manage your margin, right? You just need to focus on whether the price, the market direction and your position sizing. You enter and you take profit, you take a loss, you're done. In leverage trading, what can happen is if the market moves against you, it can take out your entire account, right? And even when the price moves against you a little bit and then moves in your favor, when it moves against you, if there's a little spike, and in crypto spikes happen all the time, you get all these nice tails on the nice wicks on the candles all the time. You could be taken out. So you need to know how to manage margin accurately, and that is a whole other discussion. But margins are the leverage, the right amount of leverage to use is something that most people don't know anything about. So most people, what they do is they go in, they say, okay, what's the maximum leverage I can trade, and they click buy, and that's why they lose the money. You have certain setups where these are appropriate, like for example a double bottom. You want to buy a double bottom, you do know that if it doesn't bounce back exactly at the double bottom, and it goes a little more than a few ticks below that, the chances of it becoming a double bottom gets lesser and lesser, and you really want to get out very quickly. So that's when you can use a high leverage. If you want to accumulate a large position, you can't use high leverage. You have to start with very low leverage, and as the market moves in your favor, you can add more and more, and you can increase your leverage a little bit. So the whole concept of managing leverage is, I don't see anyone discussing it anywhere. I don't know if any of these traders are practicing it, or they're just treating it as a gambling opportunity, which you should never do. Every trade you do has to be very strategic, well thought out. It has to have a purpose, it has to have a reasoning, it has to have a clear stop loss and target for you to exit. If you don't have that, you are going to lose everything. So that is how margin is different. It's more dangerous. It amplifies your results. So if you are a winner in spot, then you can think of trading margin. If you're a loser in spot, you're just going to lose everything faster in margin.
yeah,
So that's essentially what leverage is.
yeah. When I first started out, like I had this rule, like you said before, like if I had several losses during a day, I stopped trading for that day, and I often felt like I was left out from the day. But when I made more trades than I originally thought I would do, I
Yeah.
always ended up with a loss. I think
Yeah.
it's a very clear line behind.
And what happens to you? Like you lose two trades. What makes you say, I want to trade more? I mean, what prompted you to trade more on a losing day?
I think the mentality of like you have to win it back because you don't want to end up losing that day.
That is how gamblers think. That's the problem.
Yeah, I was going to say it like that's like more of a gambling way to do it than actually trading. And
Yeah.
also with leverage, you are like, even if you are looking at the same graphs and
Yeah.
see the graphs moving in your favor,
Yeah.
it can often be a horrible mistake to enter a trade early because it can ruin you. The trade can
Yeah. Yeah.
go a different way.
Timing. You're right. Your timing has to be more perfect with leverage trading. That's what you're saying, right? Whereas with spot, you can just buy, and if it moves against you, you wait it out.
Yeah,
Yeah. Yeah.
but what is your vision for leverage?
So there's a couple of things. One is the trading platforms for crypto are still very primitive. There's a lot of features that have been built up in the last couple of years, but many are still compared to the fiat markets are still very underdeveloped. So we want to give all the tools to the traders, to be successful and to have good risk management. So in general, what we do is we take risk and we enable hedging those risks. So the risk could be market risk, it could be any sort of external event. And the way we in crypto we can do that is we can tokenize the risk and we can enable people to trade it. So to start with, we have to build a derivatives system where we start with futures, and then we see where the market where there's a lot of market demand, and we'll create this product. In terms of the the key differentiator is we really want to be non-custodial, and the reason is, I think, is very straightforward. If you look at all the currency exchanges, they have failed because they are custodial. When there is a huge amount of money in control of like 2 or 3 people, eventually something bad will happen. They're going to be targets either internally or from externally. And it is possible. We are very close to creating a system of trading that's non-custodial but has the exact same user experience and smoothness as a traditional centralized system. So that is, in a nutshell, that's what we're building.
Yeah, that sounds very nice. I'm looking forward to testing it out.
Well, thank you.
Thank you very much for taking your time for this interview.
Very, very glad to be here and happy to talk to you anytime, Teddy.